Okay, so what's going on with GameStop? It's been in the news a lot lately. The share price has absolutely exploded and went from under $4 6 months ago to $483, where it's gone from $18.30 to $483 in the last 3 weeks. Absolutely exploded. So we've had a 100 times increase or more than 100x increase. Should you buy? Should you sell? Is it too late to buy in now? Are you too late? Is it too dangerous to buy in now? What should you do? And what does the Wolf of Wall Street think? Okay, and what's going on with RobinHood and all this share price limiting and suspension I've heard about? What's going on there? And people are telling me I can join the revolution and stick it to the rich people and redistribute wealth from the 1% to the 99%. Are they correct? Do they have my best interests at heart? So a lot of questions there, and we're going to explore them all in this video. So before you throw your money into GameStop, please make sure you watch this video, and I'm going to go through all the information that's available and talk about what things really are. And I don't have a vested interest, okay? I'm not trying to sell you anything one way or the other. I'm just trying to tell you how it is, or how it appears to be from what I've done, from the research I've done, okay? And I've spent the whole weekend on it. I've been looking into this the whole weekend, okay? And so I want to share with you what I think, and also what the Wolf of Wall Street thinks. And I'm going to provide lots of links in the description of the video for you to do further research, and there's plenty of other videos and materials out there I want to link to for you to explore things. So before you throw your hard-earned money in and buy shares at $400 or $300 or whatever a share, please watch this video all the way to the end. It might save you a fortune. Okay? And by the way, none of this is financial advice. I'm not a financial advisor. I'm just explaining how I see things. I'm trying to help people not fall into a trap. There's a big trap there, and it's going to hurt a lot of people. I'm just trying to save people from falling into the trap. Okay, so definitely not financial advice. Okay, so on to GameStop, or their stock ticker code is GME, and we'll talk about what's going on with their short squeeze. Okay, so TV, news websites, YouTube, newspapers, finance magazines that are coming out now have all been full of GameStop news lately. Okay, GameStop articles. And even my mother, who's very elderly now, she asked me what's going on with GameStop. So, when old ladies and things are asking about GameStop, then it's time to think, gee, is it too late? And you've got to be very careful. So I'll give you a quick summary of what's been happening and what's going on. And I've got tons of links in the description so you can do your own research, DYOR, do your own research. Okay, and in the morning the markets will open, and I'm alarmed at what some people are planning and what some people are doing. People have been contacting me, people have been emailing me, I've been reading forum posts on social media and things, and there's some really crazy stuff going on. Okay, and you've got to be very, very careful of FOMO, the fear of missing out. And that's when you get caught up in the excitement and the mania, and you make crazy, reckless decisions because you're worried you're going to miss the boat. Okay, if you find yourself thinking about FOMO, oh my God, I'm going to miss the boat, I've got to hand over my money now. That's when you've got to step back and think about things very carefully. Because when you're FOMOing in, that's when you lose money, and you could lose everything. And people are going crazy. I'm hearing about people who are maxing out their credit cards, not just one credit card, but multiple credit cards, and buying all the GME stock they can. Well, that's just crazy, okay, especially now. And I'll talk about what's happening and what's going on, so don't worry. Okay, we'll go through it all. Just stay with me to the end of the video. So you've got to be very careful of what people are telling you, especially that if they are trying to convince you to buy something or part with your money. You've got to be very, very careful. If something appears too good to be true, then it probably is, and you've got to be super careful. And just a disclaimer, I'm not a financial advisor. Do not take anything I say as financial advice or any kind of advice at all. Always check everything and do your own research, and always get professional advice before investing or speculating or gambling or whatever. Okay, and the stock market is a bit of a gamble. You could lose everything. Okay, especially in the current crazy market situations where things are so volatile. Okay, so before we go on, let's just talk about some terminology. Let's make sure we all understand what's happening. You don't have to understand these terms really deeply. I'll just give you a quick overview. Okay, and there's links in the description to do further research if you want to. So we'll talk about what shorts, longs, and the short squeeze are. Okay, so to go short on something means you are betting on the price going down. Okay, so and if you go short on a company's stock, you're betting on the company's stock going down. Okay, in other words, you're betting the company's going to fail, or get worse, or go into bankruptcy even. Okay, that's what going short means. Okay, to go long means you're betting on the price going up. In other words, you're betting on the company's future. You've got confidence in the company, and you're going long on their stock means you're betting the price is going to go up. Okay, and if you short a stock and its price goes down to the level that you bet within the time frame you bet, so within a specified time frame, then you win and you make money. Otherwise, if that doesn't happen, if it doesn't go down to the level you bet, or it doesn't happen within the required time frame, then you lose money. And you might lose a great deal of money. A lot more than the cost of the stock, for example. You might lose a lot more than that. Okay? So shorting has capped or limited profit potential, but it's got unlimited downside. Okay? So there's a limit to how much you can make, but there's an unlimited downside, which means you can lose infinite money if the market's really crazy like it is now. Okay? So you've got to be very careful if you're shorting stocks or shorting products or whatever, because you can have unlimited downside. And a short squeeze is when a stock rapidly increases in price, causing short sellers to cut their losses and exit their positions. So there's causing short sellers to cut their losses at the current prices, which are a lot higher than when they started, and they've got to pay a premium then to exit their positions. And this causes a feedback cycle of further pushing up the prices because people are buying stock, the short sellers are buying stock, and that's pushing up the prices further, and that's making the situation even worse for short sellers that are still trapped in the market, that have not closed their positions yet. Okay, so the cycle causes a nasty feedback loop, and some people exiting the market and buying the stock at higher prices means the people that are still left in the market with short positions, they've got to buy at even higher prices. Okay, so it can be a really nasty situation, potentially unlimited downside. You can lose a lot of money. So what's happened with GME or GameStop? Okay, so hedge funds have shorted more than and short sellers, maybe not just hedge funds, but hedge funds and short sellers have shorted more than 100% of the available shares of GME or GameStop. Okay, more than there are in existence of the available shares have been shorted, which is crazy. How can this happen? You know, so it's a situation that should never be allowed, but it's happened, and this is a very rare occurrence. We'll talk about another situation happened previously, but 120% of the available shares have been shorted, and that's insane. It should never have been allowed. The SEC should be putting rules in place to stop that. Okay, but anyway, that's the situation that they're in. So the hedge funds and the short sellers are trying to bankrupt EME, or they're betting on the price going down, GME getting sicker and sicker, and probably even going into bankruptcy. And the short sellers are going to make a lot of money in the process if that happens. Okay, so they stood to make a lot of money, but something else has happened. So a person called Roaring Kitty on YouTube, who's also called Deep Effing Value on Reddit, it's the same person, a really nice guy, noticed that the new management at GME had some great ideas for the company, and he also noticed that the stock was massively shorted. Okay, and he noticed this about last year, and started buying up stock. Okay, and he started buying up GME's stock, and he started posting about GameStop in WallStreetBets, a Reddit group, a Reddit forum. He started posting on Monday the 9th of September 2019. That was his first post. So, well over 12 months ago, he started doing this. He started exploring GME, and I don't know if he noticed the shorts back then, but he certainly noticed them during the year, and he started posting about it in WallStreetBets over 12 months ago. And links in the description, so you can check for yourself. So many people in WallStreetBets called him an idiot, and a whole lot worse, he copped a lot of abuse. You're going to lose everything. You're an idiot. You're a moron. Such horrible things they called him. Okay, and who's laughing now? Okay, so on the 21st of July, last year, the stock price was $3.90 for GameStop. By the 8th of January this year, so 3 weeks ago, the price was $18.30. And on the 28th of January, just 3 days ago, the price got to a high of $483. That's a huge increase. We're talking about more than 100 times gain. Okay, and that's astronomical. Okay, so we've got this very, very insane situation where hedge funds and short sellers have shorted more than 120% of the available shares, and the share price has increased by 100 times. Okay, so for these hedge funds and short sellers to get out of their positions, they need to buy more than the shares that are available on the market. So this started a stampede for people buying shares because they figured that these short sellers will have to buy their shares no matter what the price. If I buy a share for $400, I could put a price of $40 million on that share and they must buy from me. Okay, because I own the shares and they must buy the shares to close their position. And that's sort of correct, but not really. Okay, we'll talk about this. What the short sellers must do to close their positions, and it's not as cut and dry as that. They don't have to buy every share in the market because they can do other things like pay the penalty instead of closing their position. They can pay their penalty for another month or another 6 months or whatever, and then see how things look then. Okay, so it becomes a waiting game. Okay, so let's go forward to the next slide. So what happens if the shorts don't close their position? So if a hedge fund or anyone else does not close their short position, in other words, they buy the shares that they shorted at the elevated price, then this is fine, provided that they pay the interest on their loan to their broker. Okay, so they're effectively by shorting a share, they're taking a loan from their broker, and so if they don't close their position on their shorted shares, then that's fine, but they're going to have to pay interest, a penalty or an interest, okay? And typically, brokers charge astronomical interest rates. It's like 20 to 30% per year. They're not banks. They're not in the business of loaning money. So if you want to loan money from a broker, you're going to pay a penalty, okay? And it's typically 20 to 30% per year. So astronomical, okay? But shorters can do that while they hope that the share price comes down. So they might choose to pay the interest and hope that they can wait things out and that the share price will start dropping. So it's all a waiting game. It's like who blinks first. It's a waiting game. Okay, it's all supply and demand. If enough shareholders sell their stock, then the price will go down, and if few shareholders sell, if too few sell, the price will go up. Okay, so we've got the situation where hedge funds and short sellers own or have shorted more than what's available in the stock, and people are buying it, and the price has gone up to 100 times what it was. and so, I mean, don't get me wrong, the short sellers are in a horrible position, but it's not the end of the world. Okay, and if people put a price on their shares, if I buy 5 shares of GME and I pay the $400 or $500 a share, so I've spent $2,500 on shares for GME, and I want to put something crazy like $50 million a share on it, well, there's no way. There's no way the short sellers are going to pay that. There's no way in the world. I'll be waiting for eternity. Okay, they will play this waiting game and they'll pay the interest until the share price comes back down. Okay, the share sellers don't have to buy your shares. Okay, they can wait until shares become available on the market. So it's all a waiting game, and it's quite interesting. So how high can the price go? Okay, technically this is an infinite short. There are not enough shares available to cover all the shorts, so the price could theoretically go to infinity. You know, $1 million a share, $100 billion a share. That's possible, but it's not going to happen. It's not going to happen. Okay, there are limits to what the shorters will pay, and if the price is too high, they'll just pay the interest penalties and then wait for the price to come down. So it's all a waiting game. Like I keep saying, it's a waiting game. Who blinks first? Who sells first, or who buys first? Okay, so realistically, the 100-fold or 100 times increase that we've seen already is probably near the top, but who knows? I certainly don't know. but my guess is it's probably near the top. If the GME share price goes 1,000 times to what it was, in other words, still around 4,000 a share, that will give GME or GameStop an extremely inflated price, company valuation. Now they'll be worth more than large banks, which is just crazy. It can't happen. So 1,000 times I think's not going to happen. We're 100 times that we are now is probably somewhere near the top, but I don't know for sure. But who can say? Okay, certainly I can't. And I've talked to some stock people who are really knowledgeable about stocks, and I've done a hell of a lot of reading. And as far as I can tell, nobody can say what's going to happen. Okay, so if you find someone that knows what's going to happen, treat what they say with a grain of salt, because a lot of experts are saying they don't know what's going to happen. Okay, but certainly if people put a price on a share at $100 million for one share, there's no way on earth the short sellers are going to pay that. There is a limit to what they'll pay, because I'll just keep paying the interest penalties until the price comes down. So be very, very careful if you're FOMOing into the market, fear of missing out. Be very careful of this. Don't listen to people that say the price is going to go to $1 million a share, or $50,000 a share, or even $5,000 a share. There's certainly no guarantee that's going to happen at all. Okay, and the price could just stay around where it is now and slowly decline, or stay where it is for weeks and weeks and weeks, and then slowly decline. Nobody knows what's going to happen. Okay. So can the hedge funds go bankrupt? Well, it's extremely unlikely. Extremely unlikely. They're so big and so rich, and GameStop is really just a blip on their radar. Even at 100 times the price, it's really just a blip on most hedge funds' radars. They've got so much funds, so that's very unlikely. And they're most likely buying options and making trades to help protect them from the price swings and from the price increases on GME. They're not just standing by watching things happen and going, oh my God, what are we going to do? They're making trades and doing things that we're going to help alleviate what's happening. Okay, and they can easily afford to pay the broker's interest of 20 to 30% a year for months or years if they need to. They can easily afford to pay that. So, they're not going to go bankrupt overnight, and they're certainly not going to pay $1 million a share for GameStop. Not a hope. Not a hope on earth. They're still making money as the price rises and falls on GME and other stocks. They're still playing the game of shorting stocks and longing stocks, and buying stocks and selling stocks. They're not just freezing and doing nothing. They're still business as usual, but they're trying to exit their positions as cheaply as they can. Okay, and they've even got the support of other hedge funds. So some hedge funds have lent $2.5 billion to some of the hedge funds that are involved in this, or one of the hedge funds involved in this. I'm not going to mention any names. You can find all that out from your own research. So is there mania and euphoria in the market? So is there any mania or euphoria? Absolutely. Massive, massive mania. Okay. And this is why you've got to be super careful as well. So the situation with GME has made news around the world. Like I said, my elderly mother asked me about it. What's going on with GameStop, Mike? Are you buying? And so I just had to say, Mum, you've got to be really careful here. People out there are exploiting the situation, claiming all sorts of things to get people's attention, to get people emotionally involved, and to get them into the market. There's people out there that have got a vested interest on you joining in the market and pushing the price up higher. And these are the people that were generally the early buyers of GameStop at around $4 to $10 or $4 to $20, and they're trying to get more people into the market to push the price up even higher, so they make more money. And you've got to be very, very careful of people trying to make money out of you. So they're doing things like, saying things like, let's stick it to Wall Street, or let's stick it to the rich bankers, let's stick it to the rich hedge funds. Okay, let's distribute wealth from the 1% to the 99%. Let's distribute wealth, brother. Let's do it. The rich don't play by the same rules, so why should we play by the same rules? Okay, become part of something historic. People are going to remember this for the rest of their lives. Let's teach them the power of the people, and so on. So people are using these sorts of terminologies and these sorts of phrases to get people emotionally involved in the situation. And it's all about getting people to buy into the market and to buy shares in GameStop. Okay, and they're not doing it for your good. They're doing it so that they can drive the share price even higher, because then they can improve their positions. Okay, so you've got to be very, very careful of people saying this sort of stuff. Very, very careful. Saying this sort of stuff is like the people that went to the Capitol riots. You know, let's claim back America and all this stuff. It's just a pipe dream, isn't it? Delusional pipe dreams. And that's going on here with GameStop as well. So people who know very little about the stock market and even less about what's really going on with GameStop are FOMOing into the market after GME's, after their share price has already increased by 100 times. And that's a very dangerous time to enter the market. You know, 100 times increase in share price in less than 6 months is, wow, it's a very rare occurrence. And you've got to be very, very careful entering the market after it's already gone up by 100 times. These people here who are saying all this sort of stuff are trying to get you to enter the market and hand over your money, so it drives the price up even further, so they get even richer. Okay, and they're getting you emotionally involved by pushing your buttons, saying all these sort of half truths, you know, to get you into the market. You've got to be very, very careful. Very dangerous times. Okay, so one thing you might have heard is that RobinHood limited buys of GameStop and other stocks. So RobinHood, Webull and others suspended and later limited the buying of GME or GameStop and other stocks. And you could buy maybe 5 shares. You could sell as much as you like, but you could only buy 5 shares or something like that. And they claim that's because of liquidity issues between them and their stock clearing houses. And what they say sort of makes sense. The timing was very unfortunate, and the fact that they only picked a few stocks looks very strange, very suspect. Maybe they're telling the truth, but I just don't know, and I dare say nobody out there at the moment knows the truth of that. The feeling on WallStreetBets, which is a Reddit group, and other places, is that they colluded with RobinHood and other brokers, colluded with the hedge funds who were short on GME to stem the momentum of GME had in the market, and to help protect the hedge funds from prices going higher, in other words, higher losses. So it was all about killing the momentum in the market that GME had. It was soaring up like crazy. And then they limited the trades, limited the amount of stock you could buy, and suspended it for a while. And that killed the momentum for a while. So was there collusion? I don't know. Is this SEC going to investigate? Yes, they most certainly will investigate. Okay. And make sure everything's above board. And if things aren't above board, there'll be action taken. You can bet your bottom dollar on that. Okay, the truth will come out. This SEC are investigating. Are WallStreetBets, the Reddit group, are they manipulating the market? Okay, a very good question. And I'm not a lawyer, but it certainly appears that they may well be manipulating the market. Okay. They are openly working together and targeting stocks to buy or sell in order to raise or lower prices and make money. And I encourage you to go to WallStreetBets and read a bunch of the forum posts and decide for yourself. But that's certainly the way it appears to me. They're openly working together. They're not even trying to hide it. And it's not just GameStop. It's also AMC and Nokia and American Airlines and others as well. So it's not just GameStop, although GameStop is the current one they're focusing on. Jordan Belfort, the Wolf of Wall Street, said, if you could prove they are colluding together, then what they're doing would definitely be illegal. But can you prove they're colluding together? And from what I've read and from what I've seen, it certainly appears that way. But I'm not a lawyer. So, you know... Jordan Belfort said it's a modified pump and dump scheme. They're pumping up the price to make money, and then they're going to dump it. So that's what he reckons. And the links to the videos where he says that are in the description. It's unlikely the SEC will take action against individuals on social media or on Reddit unless there is clear and obvious pump and dump activity. So are the SEC going to take action against anybody on Reddit or other social media? I don't know. I'm not a lawyer, but they're certainly going to look into it. I would suggest they're going to look into it for sure and have a good hard look at what's going on. So on both sides, the SEC are going to be looking. They're going to be looking on the RobinHood side. They're going to be looking on the hedge funds and the short sellers who shorted more than 120% of the available stock. And they'll also be looking at what's been going on social media and in particular in WallStreetBets. So there's three things the SEC will be looking at. Jordan said he did not get involved in buying GME because if he was involved, he would get arrested. They would certainly focus on him if he was involved because of his history with the situation that happened previously when he was involved in the short selling and the fraud. And he went to prison for that. Okay, so he's not involved at all. And links in the description for videos you can watch from him. So what do I think GameStop will do in the short term? And what about the long term? Okay, so what do I think the share price is going to do? Well, GameStop is not trading on any rational or fundamental value. 100 times the old share price is not rational. It's not based on logic. It's not based on fundamental values. It's just pure hysteria driving up the price because people are trying to stick it to the hedge funds that shorted too much of the available stock. Okay, it's coming down to almost a revenge attack. Let's get the 1%ers and redistribute wealth. There's a lot of that sentiment going on, which is just crazy, irrational, emotional investing. When or if people stop buying, the share price will drop quickly. And the hedge funds or anyone else does not need to disclose how short they are. So we don't know how short they really are at the moment, or who's short, or where the shorts are. At any time, the share price could crash back down to around $10 or even less. Okay, so it's possible the share price could crash back down to lower than it was 6 months ago. Okay, so if you're buying stock at $400 or $500 a share, and it crashes back down to $4, then you're out of pocket, $496 or so a share. That's not a happy place to be. So you've got to be very careful of getting caught when the music stops. A lot of people are going to be left holding very expensive bags when the music stops. You've got to be very careful. You don't want to be you don't want it to be you. And a lot of people are going to get hurt, and it will most likely be lower income earners who FOMO'd into the market late to try and catch the golden goose too late, and it's going to be gone, and they're going to be wrecked, in deep trouble. Maxed out credit cards and who knows what. Not going to be a happy time for them. A little bit about Volkswagen and the short squeeze of 2008. So there were 12.8% of outstanding shares were shorted. With GameStop, we got 120%. So much higher shorting going on with GameStop. But in 2008, only 12.8% of the outstanding shares were shorted. But it turned out there was only a float of 1% of shares. Porsche declared that they owned a huge percentage of the shares and options, which was much higher than people thought. So that meant there was really only a float of 1% of the available shares available. Okay, and what that meant was there was a very small exit through which a huge number of people had to rush. Okay, so people panicked and started buying, and the price went up, and the people who were left with shorts had to buy higher prices to get out. And it was carnage. Okay, and for a very brief period of time, VW was the most valuable company in the world. Okay, so the share price went rocketing up, and a very short spike peak, and then came crashing down again. The short squeeze lasted a few weeks, okay, where the shorts are trying to exit the market, but the very tall spike in prices, where the share price went up to over €1,000, maybe lasted 2 or 3 days. So the price spiked up, and everybody sold, and then the price came crashing back down again. Okay, as the shorts exited the market. So very, very spiky price means if you're not watching the market when the price comes down, you're going to be left with potentially very expensive shares if you bought in when the price is high. So you've got to be very careful. Managers of hedge funds were in tears on the phone, describing the situation like a nuclear bomb going off. Okay, so, but they managed to get out. You know, there's two or 3 days of really high prices, and then the price came back down to much, much lower prices, and the short squeeze lasted a few weeks. So the situation doesn't appear anywhere near as bad as it is now, with 120% or more of the stock shorted, but we don't really know what's going on because we can't see what people are doing and what the real situation is. Okay, it's very hard to get access to that information. It's certainly accurate, up-to-date information. So what do I advise? Okay, well, for a start, I advise you to be very careful. Very, very careful. Things are super dangerous. The share price has increased by 100 times. You've got to be super careful. Oh my God, you've got to be careful, because it can crash back down again to 1/100th of the value again within a day or two. Okay, so you've got to be very careful. Watch all of the videos linked in the description below for starters, and then do your own research on top of that. Okay, and be very, very careful of people trying to coax you into the market and push your buttons. And be very careful of FOMO, the fear of missing out. Do not let FOMO control you or cause you to make crazy or reckless decisions. And be very careful of people trying to talk you into parting with your money, or talking you into enter the market, or pushing your buttons and saying, you know, let's stick it to the rich people. Let's teach them a lesson. You know, because they're just trying to get you to buy into the market and push the price up further so that they make more money. They don't care about you at all. These people that are trying to talk you into going into the market. They're just pushing your buttons and trying to get you to buy into the market and push the price up even further, so they can exit at a high level and buy a new Lamborghini and buy a new yacht and buy a mansion, whatever. Okay, they don't really care about you at all. They're just trying to get you to part with your money. So be very, very careful. Be very careful of getting emotionally involved. Like I said earlier, you know, let's stick it to the 1%, all that stuff. Yes, it's a nice dream, but they're only part truths. They're only half truths. Okay. And you've got to be very, very careful when people push your buttons and make it so you can't really think rationally. I'm going to go in. I want to stick it to those rich bastards. No, that's not a good way to enter the market. Okay, because they can last longer than you can, and the market's really irrational now. Really, really irrational. 100 times increase. My God, you've got to be so careful. Okay, so another question, how much GameStop do I own? Okay, and I own 0. I currently own 0 shares of GameStop. Not a single share, not even a part of a share. Okay, I don't have any position at all on GameStop. I missed the boat. Okay, I watched all this happening and I couldn't believe what I was seeing. And by the time I've transferred money to a broker to buy some shares, it's too late. Okay, there's no way at all I'm going to go and buy any now that the price has already gone up 100 times. There's no way. You know, it feels to me like the party's over. That it's certainly winding down, and there's no way I'm going to go in. You had to get in under $100 to make it worth your while, because it was shooting up then. But there's no way I'm going to do it now. It's not. I don't think it's going to go up 1,000 times. It's gone up 100 times, and I don't think it's going to go up 10 more times. So the risk is too great to enter the market now, I think. No one knows what might happen, so I could be wrong. And the share prices could rise up to $1,000 or more, and it might stay there for hours or days or weeks. Nobody knows. Okay, nobody knows. And or just as easily, the price could just as easily crash back down to $10 or so if enough people sell. Okay, so people have maxed out their credit cards to buy this stock, and when the credit card bill becomes due, they might have to sell. You know, the rent might be due, food bills, all sorts of things might be due. It's a hard time at the moment with COVID and everything going on in the world. So people have bought stock hoping to make a quick profit, and they might have to sell. Okay, so the price could easily crash back down to $10 again, or $100 or whatever. So there's no way I'm going to buy $500 a share of GameStop. It's way, way, way insanely overpriced, and I don't think the upside's there. But then I could be wrong. I don't know what's going to happen. Nobody knows what's going to happen. Okay, so the Wolf of Wall Street, I'll just talk about some of his tips. And the videos for all this are linked in the description. So the tips that he had are bulls make money, bears make money, pigs get slaughtered. Okay, so the people who are bulls in the market and bears in the market, they make the money. The people that come to the market late, you know, when when the top's already reached or the bottom's already reached, when they enter the market late, when everything's already happened, they're the pigs that get slaughtered. Okay, and I think if you're entering the market now, after the share price has already done 100 times increase, then I think you're going to be a pig that's going to get slaughtered. But that's just me. I could be wrong. Okay, he reckons you don't want to catch the bottom and you don't want to try and catch the top. Okay, so don't try and time the market because you're not going to be able to do it. You're going to be watching the market all day long and it's going to drive you crazy. And try to get in at the end of the beginning and then try and get out at the beginning of the end. And it certainly feels like the beginning of the end to me for what's happening with GameStop. Okay, we're not at the end, but it certainly feels like the beginning of the end. And the share price could go up another 10 times. Perhaps it might go to $1,000 plus. I don't think it's going to go to 4,000 or 5,000. I can't imagine that. The shorts are just going to pay the interest penalty and wait for the stock price to come down. They're not going to pay $1 million a share. They're not going to pay $50,000 a share. I don't think they're going to pay $5,000 a share. They're just going to pay the interest and wait for the price to drop. It's going to be a waiting game. Okay, and I think the Wolf of Wall Street agreed with what I'm saying, and watch his videos and you'll see. Don't try and top ticket. Don't try and bottom ticket. Don't try and time the market to get to the bottom or the top. He reckons get in the middle once, and get out at the beginning of the end. Don't wait for it to end because the end can be a steep cliff. The price can drop quickly. So don't wait till the end because you might be too late. So get out at the beginning of the end, is what he says. Don't be too greedy. If you've doubled your money or tripled your money, consider being happy with that. Don't go for 100 times gains. This is all good advice that he has. And the videos are linked in the description. Be very careful, he says. Okay, so I reckon that's great advice from the Wolf of Wall Street. And links in the description for more. Okay, and so another disclaimer just to finish off. Be very, very careful if people are trying to convince you to buy into something. If people are pushing your buttons and trying to get you emotionally involved, let's stick it to those rich bastards. That's when you've got to be super careful. That's when you've got to be super, super careful. Okay, let's stick it to those mongrels. They don't play by the same rules as us. The 1% are living in luxury while we have to work 50-hour weeks to put food on the table. Be very careful of people saying that. It's half true what they're saying, or more than half true, but they're trying to push your buttons to get you to go in so that the price goes up higher so they make more money. That's what they're trying to do. So you've got to be very careful of those people. If something's too good to be true, then it probably is. And there's a disclaimer. I'm not a financial advisor. I'm not giving financial advice. Always do your own research. Always get professional advice before investing, speculating, or whatever. Okay. And for more information, see the useful links in the description. Hope this video was useful. Thanks for watching, and have a nice day. And if you're going into GME now that it's 100 times what it was just a few months ago, and dozens of times what it was just a few weeks ago, if you're going to GME now, gosh, be careful. I wish you all the best, but I'm really worried about what's going to happen. The edge of a cliff is very steep. So you've got to be careful. You've got to make sure you're out of there before the cliff comes. Okay. All the best to you, and thanks for watching.